Move. Ashley Webster's here, Liz is here, Todd Horwitz in Chicago, and Michael Murphy. All of us getting together on a day when it looks like this market is headed south, big time. All right, Todd, there is a general sense of unease around the world. I can't put my finger on it. What's the big problem?
Good morning, Stuart, and before, who is Caitlin supposed to vote for? Anyways, around the world, the problem is the overall unease of the central banks. When you have all this financial engineering, when you continue to try to manipulate systems and you continue to manipulate the money, you end up with a problem. You saw what happened in Japan with the negative interest rates. It's a possibility it could happen here. We've got too many people trying to get involved in this pot, trying to figure out the best way to get out, instead of letting free markets and price discovery and letting the markets price asset classes, because there's nothing better than markets pricing their own assets. We don't need any help from the central banks or the other person that I'd get buzzed for if I said.
Okay, Mike, you're trying to hold us, you're trying to hold our hands here, so don't be too panicky here. That's your message.
Absolutely. So we closed yesterday on the Dow down about 170. We were down over 400 points at one point. So the market had a nice rebound off its lows. There were buyers coming into the market. So I think to Todd's point, though, about central banks, I don't think that point is to be disputed right now, because central banks are in the markets.
But what we're talking about is the importance of what they're doing and their failure thus far. I mean, negative interest rates on $5.5 trillion worth of bonds. I mean,
well, when you look at, you talk about just Japan specifically, but I look at the U.S. and I don't know that you can call QE a failure. You know, I don't know what would have happened if the Fed never got involved. But that's ancient history at this point. So where we are right now, we need rates.
That recovery in the market yesterday, Mike, was all energy. It was very strange. Down 400, came back to 177. It was the energy sector, none of the other sectors. Chevron finished up 3.5%. It was a strange move. Had the traders scratching their heads yesterday.
If I lend money to Uncle Sam, to the American government today, and I lend it to him for 3 months, do you know what, on $100, do you know what interest I get? 1 cent in a year. That's it.
And it's negative after inflation, right?
After inflation, it's negative. That's the point we've reached in America, and I think that's a problem.
That's a problem, yeah.
Right, Emac, you've got to tell me about this tech bubble. I call it a technology bubble which is bursting. You going to take me on?
Yeah, well, Goldman Sachs and JP Morgan analysts there who we've been talking to would say the same. They're saying a macro momentum bubble. In other words, moonshot ideas, you know, driverless cars, internet drones has driven stocks higher in the tech sector. You're talking Amazon and Netflix doubled last year. Those are down nearly a third this year. So what are they talking about will rescue the tech sector? They're saying that the earnings are solid. It's not like the dot-com bubble. Basically they're 5 times the profits of the top 10 then, now, or what's happening now. So they're saying essentially stock buybacks will help these stocks.
But look, if your portfolio has those stocks in it on our screen right now, you are nervous in the extreme.
Yeah, but those were the few stocks that made money last year. They carried the rest of the markets. People are getting out of them now so they can have some cash because they're holding a lot of other losing stocks and they don't want to take that loss.
Absolutely. And you look at the FANG, Facebook, the FANG stocks that we talk about, they've lost $165 billion worth of market cap year to date. 165
Did you just say FANG?
You got the buzzer because of FANG. Okay.
I'll take the buzzer. But
those stocks on the screen: Facebook, Amazon, Netflix, Google. Okay. How much have they lost?
165 billion of market cap.
But you got to
this year.
But wait a minute. You have to compare to their massive run up last year.
Absolutely.
That's the comparison. That's why it feels bad, right?
Fair point. Okay. Now, gold. We said earlier that it had surged. I'm not sure it's surged. It's not even at $1,200 an ounce yet.
No, but it's up 14% since December 3rd. By far the best performing class. The question is, how far can it go? Already analysts are saying this is overbought. There's no inflation. It is a safe haven, much like the treasuries. There's few of them out there. Can it go higher? Maybe. Yes, could get to 1,200 and up, but the long term on this is not that positive.
Not that big a... look, if you're looking for safety... It's not so much gold. It's United States Treasury securities, where the yield on the 10-year is, 171 as we speak. I mean, you raise your eyebrow. I mean, that's
because now
stuff.
They're talking to the U.S. banks, get ready for negative yields on U.S. bonds.
Exactly.
Watch out.
171 on your screens. You don't see that very often.
With those yields
really
so low, where do you put your money? You don't put your money in at 1.7. You invest in a higher risk asset class, which would be equities.
Well, maybe you do, Mike. But what if you was to say, hey, I want safety, boys. That's what I want.
For 1.7?
Now listen to this. Goldman Sachs says there is a risk that the price of oil drops below $20 a barrel. Todd, come on in, please, because if that happened, if you drop below $20 a barrel on oil, that's a real bust, isn't it?
It is, but I don't think it really happens, and I don't think Goldman Sachs really means it. Again, this is part of the whole system that Goldman Sachs, I think, is putting themselves in position to be a buyer of oil. I don't think they're looking to sell oil at all. They are the same guys who called $200 oil, but when you looked at their books, they were short. I guarantee if we can look at their books, they're going to be buyers of oil here. They're not sellers. We're at $30. Can we go a little bit lower? Absolutely. But at the end of the day, you can only go to zero from here, and we're going to have a need for oil. We still need to use it. There's going to be a demand, and the economy eventually will pick up.
Okay, we got it. Now, if you look at the bottom right-hand